Hello everyone, welcome to today's US Open. It is Tuesday, February 21st, 10 minutes before US markets open. This is your host, Nikos Tsabouras, Senior Market Specialist at FXCM. The week started on a subdued note, we would say, with US markets out on holiday, but today we got a slew of economic data and expect more to come over the following hours and days. The day started with the minutes from the Reserve Bank of Australia, which is rather hawkish, and PMIs from Europe, with UK services PMI expansion standing out. US-China tensions remain in the spotlight, and we also got a few interesting earnings report from the United States. Before we get into all of that, however, as always, please read carefully the risk warning and the disclaimers, and then we will get started. Once again, I urge you to read carefully through the disclaimers and the risk warnings before we begin. Okay, let's get the ball rolling. So as we look Euro USD, before we get into that, we already said that the minutes from the Reserve Bank of Australia and the UK services PMIs stood out. We'll talk a little bit more about that in a bit. Just to say a few things around the US-China relationships and the tensions that we have seen recently there over this balloon and flying objects saga. Now, on Sunday, US Secretary of State Blinken spoke to CNBC's Meet the Press, and other than this incident, he also added another level, saying that the United States is concerned that China is considering providing lethal support to Russia in its aggression against Ukraine. That's a quote. So we see that another layer is added there in this, let's say, rivalry, and it looks like these tensions will persist. Of course, this dampens sentiment, but so far we haven't seen any big reactions. Now, before we go ahead with Euro USD, let's also take a quick look at today's earnings. We had US retail giants reporting. Home improvement chain Home Depot offered somewhat mixed results and also underwhelming guidance, expecting flat sales growth in the 2023 in the new fiscal year, and also announced a $1 billion spent for wage increases. Now, Walmart, also today before US Open, provided solid results. Revenues grew more than 7% year over year in the last quarter, but operating income dropped, and once again, guidance was a bit underwhelming, and both stocks are down in pre-market. We are 6 minutes before the US Open. Okay, so that's that with earnings. Let's go ahead with Euro USD and talk about what we have here. So first of all, as we said, we have some economic releases from Europe. Sentiment in Europe and Germany continued to improve from what we saw in today's ZEW sentiment survey, while preliminary PMIs were mostly good, not stellar, but overall good. We also continue to get hawkish commentary from ECB officials. Mr. Rehn spoke yesterday to German newspaper Börsen-Zeitung, and he talked of hikes beyond March, which is in line with what we have heard from President Lagarde and other officials, and the terminal rate to be reached in the course of summer. Meanwhile, expectations around the Fed remained heightened after last week's higher than expected CPI and PPI release, as well as hawkish commentaries by a series of policymakers. We discussed about that last week as well. And the recent repricing around the US terminal rate has narrowed the policy differential between the ECB and the Fed, weighing on Euro USD. And now markets, of course, anticipate a slew of economic data from both sides of the Atlantic and the Fed minutes tomorrow. We will elaborate more later on around the upcoming events at the last part of today's sessions, as always. Now, the tech outlook has not changed much as Euro USD, and let me switch to the 4-hour chart here. Here we are on the 4-hour chart. As I said, the technical outlook has not changed much. The pair continues to test this key area here, which is the 23.6% Fibonacci of the recent ascending leg from the September multi-year lows. And daily close below could open the door for further losses towards the 38.2% level at around mid-1.4 region. But we can see that the downside seems well protected. We got the daily Ichimoku cloud, the thick cloud, and the ascending trend line from the September multi-year lows. Now, the policy differential may have narrowed given the heightened expectations around the Fed, but based on what we see from commentary from market expectations, the ECB will still likely raise rates more when both cycles are over. And we can see that the common currency is resilient around this key support region, and as such it has the ability to push back towards 1.08, but the truth is that 1.1067 looks distant at this stage. Of course, so far we have a very limited correction that does not alter the broader rebound, but there is caution to see how the next leg will go. Now let's move over to GBP USD. And let's go here to the 4-hour chart again. So GBP USD jumped today after the preliminary PMI data, which showed that the services sector expanded in the UK for the first time in around half a year. Of course, around 2/3 of the UK economy is services, and the rebound in activity raises chances of another hike by the Bank of England. However, forward guidance is unclear, and there are divisions amongst policymakers. These were evident both in the vote counts of the recent decisions and also on the recent hearings at the UK Parliament, and this creates an uncertain backdrop. Now, the British pound tries to retake the 200-period EMA here, which could shift bias to the upside, but quite frankly does not inspire much confidence for moving above 1.25 and mostly staying there. Once again, the repricing around the Fed's terminal rates boosts the US dollar and creates risk for new 2023 lows. It's here at 1.1840, but it's probably early to talk about moves below 1.1652. And now let's go to the Aussie. We can see here the Aussie versus the US dollar. So last week we had talked about the pair being exposed to this region. Here, this confluence of supports at around 0.68, which we had said could limit the slide, and it did do so. The pair bounced off this region, and this keeps the door open to 0.70, but again, we're cautious for sustained advance past this level. Of course, as long as this region holds, the pair can push for higher highs, but we're cautious around that for the time being. Now, today's accounts of the Reserve Bank of Australia's last policy meeting were hawkish. They revealed that a pause of hiking was out of the question, contrary to the previous meeting when officials had discussed that. And of course, the reason mostly is surging inflation. We've talked about the last policy decision, and in any case, it was a hawkish note from the RBA. However, strong USD on the back of strong US data and higher terminal rate expectations keeps risk for further losses towards below this key level that we have talked about many times, and towards 0.6628, but a strong catalyst would be needed for further losses. And the US markets are now open, returning from the long weekend. So let's shift gears and check the Nasdaq, the tech-heavy NAS 100. We still need to see how traders will react as they return to their desks. But in any case, although NAS 100 has been resilient to the expectations around the Fed and the hawkish rhetoric, we see that now those are weighing over the index during this last few days. Now that creates a distinct possibility for a break of this critical region here that we have commented on before. It's a 200 period EMA and the 38% Fibonacci of the last leg up, this advance here. That would bring the daily Ichimoku cloud in the spotlight, but probably another catalyst will be needed for this region to be challenged. Now, as long as the correction, this pullback stays around, respects this area, bulls remain in control and have the ability to push for higher highs towards 13,207. But of course, it's early to talk about anything more at this stage. Once again, this more aggressive pricing around the Fed. We have talked again about how markets now expect another 75 basis points hikes by the Fed compared to just 25 before the blockbuster jobs report at the start of the month. So this definitely weighs on the index, with markets largely, with stock markets largely being overly optimistic about inflation and having underestimated the bank's resolve to fight inflation and to hike by as much as it had said. So we're seeing we're sort of in a shifting environment, and we need to assess further. Now, looking ahead, there are quite a few things coming up. We expect President Lagarde to speak today. We don't know on what subjects she will talk about, but it will be on our radar. Now, tomorrow on Wednesday, we expect the accounts of the last Fed policy meeting at the start of the month. The bank had further slowed its tightening pace with 25 basis points hikes. Chair Powell had acknowledged this inflation and although he remained hawkish, he was not exactly forceful. Now, we already know, we learned last week, that two non-voting members, Ms. Mester and Mr. Bullard, advocated for a bigger 0.5% move. So it will be interesting to see how this reflects on the minutes and if there are any divisions amongst policymakers. Now, earlier on the same day, we expect the Reserve Bank of New Zealand to announce its latest policy decision. During the last meeting back in November, officials had raised rates by a record 75 basis points. Now, it may be hard to repeat that, and baseline expectations, as we see on the economic calendars, are for a smaller 0.5% adjustment. This would be reasonable given the fact that inflation has steadied in Q4 and unemployment ticked up. Of course, we'll be expecting the updated projections as well. They will be a key focal point. Now, there are quite more things before our next session on Thursday. We expect US Q4 GDP, the second reading. The first reading was an expansion of 2.9%. We also expect Eurozone CPI inflation. On the earnings front, US chip designer NVIDIA reports on Wednesday, Australia's Qantas Airways on Thursday morning, and we also expect Chinese heavyweights within the week, such as Baidu and Alibaba. So that's it from today's session. We'll talk again in 2 days on Thursday at 14:20 GMT, 10 minutes before Wall Street opens as usual. Thank you for joining me.